Hey everyone, my name is Nicholas Merton here from Data Dash, and today I want to spend a decent amount of time to send a personalized message to the commissioners over at the SEC or Securities Exchange Commission in regards to the topic of a Bitcoin ETF. As of recent, the SEC has made it clear that they're not going to be making any comment of approval or disapproval on the variety of Bitcoin ETF proposals until the month of September in this year. So, between the time window until we get an official comment, I think it's very good that we all pitch in our personal opinions and weigh the pros and cons of having an ETF for Bitcoin. And today I want to spend some time to talk about why I personally believe that it would be beneficial in the long run. Now, of course, I want to make it clear out the bat if it wasn't obvious already. I'm obviously not the CEO of a large investment bank or hedge fund in the financial sector, but I have spent about 7 years studying traditional markets such as stocks, bonds, ETFs, and then also trading in cryptocurrencies. So today I want to share why I believe a Bitcoin ETF will actually help to meet a lot of the recent SEC's concerns that they've put out publicly, such as, for example, manipulation and liquidity. These have probably been two of the larger concerns that I think the SEC is facing, and I think they're justifiable concerns because we have to really realize, and I think this is a good area to start out on, that we're working with a very new emerging currency market. When we take, for example, traditional currency markets as a measure, you'll get numbers ranging from 84 to $200 trillion. 200 trillion. That's a lot of money when we're talking about a given market, and that's traditional currencies, whereas cryptocurrencies are currently trading at a valuation, I think at the time of this video, around $300 billion. So we're dealing with two very different markets in the sense of size. And when you're talking about size of markets, you have to be concerned about potential manipulation. Along with that as well, a lack of liquidity. We're only seeing a few $10 billion being traded, or tens of billions of dollars being traded in cryptocurrency markets in any given 24-hour period. So this is very different between traditional foreign exchange markets for traditional fiat currencies. Along with this as well, another stated concern in regards to the kind of manipulation and lack of liquidity aspect has to be with the large ownership of whales in the cryptocurrency space, as they're commonly referred to, or larger early stage investors in the cryptocurrency space. There's been a lot of headlines ringing the idea that 1,000 people own 40% of all Bitcoin, and that Satoshi Nakamoto, the anonymous founder of Bitcoin, owns over 1 million Bitcoin. Now, all of these concerns, I think, are genuine and justifiable, and in fact, some of them can be backed up when we take a look at the public ledger. And I think that there's certain concerns that should be factored in as a con here, as a fear in this sense that there might be prone to manipulation in regards to cryptocurrencies, or cryptocurrency markets might be prone to manipulation because of this. But I want to talk today about why I believe an ETF would actually help to alleviate some of these fears. Many people feel that in this case, if we open up an ETF and retail investors get involved, that this is actually going to leave retail investors vulnerable to these massive kind of pump and dumps in markets, these massive moves of price where whales can easily toy around with the price. But the fact of the matter is, though, is that whales are not only losing more and more control over time, but an ETF would actually alleviate a lot of the control and the centralization of ownership of Bitcoin that whales currently have. And I'll explain that as we go throughout the video here. So let's take a look at, for example, a big topic that's been going around in the cryptocurrency space, and that is OTC markets, over-the-counter markets. Now, I've not only been meaning to do a video about this on my channel personally, but I've been giving speeches about this as I go across to a variety of different conferences in the cryptocurrency space. And I talk about how the OTC market has actually opened up the doors for transactions that would have never been able to be done on traditional exchanges to actually happen. And the reason this is because when you're dealing in OTC markets, you're dealing with very large investors, and along with that as well, very large clients who are looking to sell. So on both sides, for example, on the selling side of cryptocurrencies, a lot of these whales that the media keeps on referring to are large miners. Along with that as well, you have early stage investors, many people who are libertarians in the cryptocurrency movement who got in back during the early 2010s. And along with that as well, you have people, for example, who may be, for example, cypherpunks, people who believe in the alternative money market, very much like libertarians in that sense. So you have a lot of these people who have a massive amount of Bitcoin, but nowhere to sell it. They can't go on a traditional exchange and sell it because if they sell even a fraction of what they own, the price would move dramatically. It's what's known as slippage in markets. And it's what keeps a lot of these larger people from selling and actually leaves them towards hodling, whereas they're looking for an exit point to at least close some of their holdings. Most of them are hodling for the long term because they believe in cryptocurrencies, but there are many who also want to move some of those cryptocurrencies and trade them in exchange for fiat or paper money. Well, there is a place where this is happening because there's also a matching buy side on the OTC markets. We have a variety of hedge funds and family funds, usually areas of the institutional sector that are less regulated, getting into these markets early on and giving exposure to their institutional clients into cryptocurrencies that they probably wouldn't be able to get previously, either through the fact that they can't buy on traditional exchanges because there's a lack of liquidity or the ease of use of acquiring cryptocurrencies. So we find a match made in heaven here with OTC markets. OTC markets allow a direct swap of the cash and the cryptocurrency between the two parties so that those who are early investors in cryptocurrencies can easily start to get some of their positions closed, and along with that as well, that some of the early, some of the investors who want to get into cryptocurrency markets are able to do so without concerns of slippage on their side as well, having to pay a premium on the exchanges after buying so much and clearing through the order book. So this is something that has brought about a lot of distribution. It has fixed a lot of the issue that many people had and worry of cryptocurrencies, that a select few own so much and can manipulate markets very easily. We've actually seen that this has brought about more distribution as we've opened up different forms of markets. And this is going to lead me towards my point of an ETF. Because as someone who's been in this market for a while, I'm genuinely concerned that this market isn't just simply held by a select few. We want this to be relatively distributed so we can have healthy price patterns, that we can have a healthy development of this market. And I also just want people, hopefully, to have exposure of cryptocurrencies so long as they feel that it's right for them. In this case, we can also make the same case as well for a Bitcoin ETF. Now, why is a Bitcoin ETF beneficial towards the longevity of crypto markets and meeting the SEC's concerns of manipulation and lack of liquidity? Well, in this case, if we were to allow a Bitcoin ETF to be created and have actual Bitcoin backing the ETF, as we've seen the SEC state, in most cases it seems like the SEC, from what I've been able to gather, and please address me if I'm wrong on this, but it seems like the SEC wants an ETF, or at least an initial ETF, to have the Bitcoin backed behind each share of the ETF. And in this case, what's going to happen is if we open up a multi-$100 million or billion-dollar ETF class for Bitcoin, this is going to require a large stake of Bitcoin behind the ETF, taking a reduction of at least 1 million to 2 million Bitcoin off the market. And if this were the case, if we were able to get hundreds of thousands to millions of Bitcoin off of these larger whales and original early stage investors in cryptocurrencies, it actually removes a lot of that centralized ownership, and in fact distributes it amongst ETF holders. And the only people who are going to be actively trading those ETFs, the Bitcoin under those ETFs, are obviously the shareholders of the ETF, many of which are investing in the long term, and outside of that probably are speculative traders in the institutional side of Wall Street, etc. So we can obviously see that this is removing some of the centralized ownership and is distributing it out amongst both, hopefully, retail and institutional investors in this case, and leaves it where we're not seeing these massive sell-side activities or buy-side activities on exchanges, because it's going to be happening in OTC markets. The exchange-traded product creators, for example, some of them like VanEck and the CBOE, very well-respected financial institutions, have already made it clear that they're going to be going to OTC markets to make these transactions. So in this case, we can not only know that these transactions are not happening on exchange, so we're not going to have the crazy volatility that the SEC has stated that they've been concerned about, but along with this as well, we have an opportunity to distribute some of the holdings of Bitcoin and to give everyone an opportunity to gain exposure. Now I want to go back to kind of summarizing my final point here. And this kind of goes towards a moral question as well. Now that we know that Bitcoin is obviously not a security, now that we know that Bitcoin itself and cryptocurrencies are becoming a little bit more of a mature market and are building more of a demand for a retail basis. I want to emphasize my claim of creating an ETF for both institutions and retail investors. And when I'm talking about retail investors, for those who don't know, it's average, everyday, kind of Main Street investors in this case. The SEC's main purpose is to protect retail investors. And we've seen that a lot of the proposals for ETFs have actually shied away from creating an ETF for retail investors. In fact, it's been claiming that, for example, maybe we should start by creating an initial ETF that is so expensive that only institutional banks and investors would be able to purchase it. And I think this would be a better step rather than not having an ETF, but at the same time, I really want to address to the SEC that as an organization that's a main purpose and statement is to protect retail investors, that at the same time you don't shy them away from having the opportunity to invest in these emerging markets. And now I stated in my article, and for those of you who would like to read it, please look down in the description down below the video. For those of you who have read my article, you'll know that I stated that the SEC has approved 3 times leveraged ETFs for volatility, for pharmaceuticals, for all types of different crazy volatile markets. And I think, even though as someone who's won and lost trades on using these different leveraged ETFs, that we should at least give investors the opportunity to this. For it is their right to experiment in these markets, to try different means of investing and trading. And I think a Bitcoin ETF is no more volatile, or at least will be no more volatile than that of leveraged ETFs that are already out there. And that we shouldn't stifle the opportunity of average everyday investors to immerse themselves in these markets, to help these markets mature in the long term. And when I mean mature, or when I say mature, what I mean is the fact that we can start to see this become a more well-formed market. Rather than a $300 billion cryptocurrency or emerging currency market in this case, we could have a multi-trillion-dollar cryptocurrency market. Some seen as digital assets, some seen as actual everyday currencies, etc. And I think that this is the perfect first step. So, to that, I would say to the SEC, to Jay Clayton, and everyone who is helping to determine this decision, to please consider the idea that I think the major concerns that you all hold of manipulation as well as liquidity will easily be fixed by bringing in a Bitcoin ETF, or at least will be alleviated. And over time, we will see those concerns continue to dry up as this becomes a more immersive global currency market. So to that, thank you so much for spending the time if you sat through and listened to me. I know I probably seem like an average everyday Joe in this sense, but I'm very passionate about the opportunity of people to participate in a variety of financial markets and to diversify in whatever they choose, so long as it's a well-formed and established space where they have an opportunity to make a return in the long term. So in that case, thank you so much. Appreciate the time. Take care, everyone, and I hope you all have a wonderful rest of the day. Take care.